pick the right stock at the right time.
Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines at this hour. Former RBI Governor Raghuram Rajan wants the independence of India's central bank and its governor enshrined in the act. JSW Group Chairman Sajjan Jindal is willing to join forces with the Ruyas in their bid to retain SR Steel. He wants to keep ArcelorMittal out of India. The government will request the RBI to defer provisioning for banks with exposure to IL&FS. Robust performance in the FMCG and hotels business is likely to aid ITC's third quarter performance. Analysts expect cigarette volumes to grow between 4 to 7%. And Interglobe Aviation is expected to report a 27% fall in profits, even as pricing improves in the seasonally strong December quarter. Well, let's take a look at the trade setup for the day today. The world over, all media is awash with headlines of the fears of a slowdown, whether it's due to trade tensions or otherwise. But slowdown is the word that is creeping up across conversations in Davos as well. And we'll give you slices of a bunch of those conversations. But frankly, if you just look at what's happened on Bloomberg.com, for example, all the stories are about this. Black & Decker, it cracked materially after profit growth missed estimates. J&J has said that growth may slow down or halt altogether in 2019. UBS says that downturn isn't over. Post the 13 billion pullout by investors, they gave these comments and the stock plummeted as well. So across the board, across industries, companies are fearing and talking openly about the possibilities of a slowdown. So the world over, that is essentially the mood, that growth will come off and come off materially. Will it necessarily be bad for emerging markets vis-a-vis developed markets? It's difficult to say, because what will accompany the slowdown is potential slowing down of rate action by the Fed. And none other than Ray Dalio of Bridgewater Associates has said this. He mentioned this in a debate on Fox, I presume, that there's a reasonable chance that by the end of this whole period, monetary policy and fiscal policy may have to become easier relative to what is discounted in the market. And frankly, that could have a material impact on what the emerging markets do as well, because if what is discounted in the market is X, and if the rate hikes are not as steep, then the outflow of money from EMs into DMs may not be as strong as well, and that might actually augur well for the emerging markets. But very difficult to paint all of these things right now. Frankly, in theory, talking about a lot of this is okay. Practically, when it takes shape and form is a very difficult piece. But keep in mind that not all bad news may necessarily be very, very bad. However, what is the trade setup looking like? Frankly, yesterday's day was awash with a fair degree of red, even though the headline numbers didn't crack too much. Autos, metal, firstly the US markets, and all of them looked very, very weak. So about 1.5% down for all the three key indices. Europe wasn't an exception either. Asia starting off on a mixed bag, but a flattish note, and the SGX Nifty 2 indicates a slightly flattish start in the session today. But we know amidst this flattish start how the underlying tone is. If you just look at the trade yesterday, for example, while the headline numbers were flattish, a bunch of sectors corrected. Autos corrected, metals corrected, and corrected quite strongly. And while oil sensitives gained, the market breadth was terrible. The headline numbers may not have cracked too much, but the market breadth was looking very, very wobbly over the last 3 days, while the Nifty may have just held, and the white line is the index, which has not cracked too much. But look at the blue and the yellow line, which is the mid cap and the small cap indices, and they have come off quite materially yesterday too. And by the way, yesterday the index stayed flat, which is why you see a flattish line, but the breadth was very weak, about 5:2 in favor of the decline. So the broader market stocks aren't quite happy, and it's showing in the way the prices are getting discounted as well. What to watch out for in today's session? I would presume aside of the perceived market volatility, and VIX is on a high, the results would be the key thing as well. A bunch of very important numbers coming out today. So from the index, you will have ITC and Bharti coming out with the numbers. More importantly, a bunch of mid caps and small caps, very, very active names, very actively traded names coming out with numbers. Canfin Homes, one more NBFC that you would watch out for, DB Corp, very important media company, SL Propack, the largest packaging company. Then you have Interglobe Aviation, Pidilite, as well as Radico Khaitan and United Spirits from amongst the liquor companies coming out with numbers. And Raymond would be in the thick of things, as would be Ujjivan Financial. So a clutch of very important mid-sized companies, non-index companies that will determine what happens to the broader market mood in the session today. So lots to watch out for during the course of the day today. I argue during the course of the week as well. It's a results heavy week, I must add. What to watch out for in terms of 9:15 a.m. today? I think 3 or 4 stocks which materially stand out to my mind. Firstly, top of the mind would be Prabhat Dairy. When I sent out these notes, we were awaiting the formal management commentary awaited. They have gone out and said that they will return the money to shareholders. They reiterated that as well, but brokerages haven't been too happy. MK has suspended coverage. They are saying that the deal is negative for minority shareholders, but this stock will firmly remain in focus this morning. Don't quite know what it will do after the 15% cut already, or actually after the 35% intraday cut already, but let's wait and watch what happens today. Oberoi Realty, it's usually a very strong stock. And while the revenue numbers looked okay, I think the margin contraction was very, very sharp. It's gone down to 35.6% versus 54% on a YOY basis. Operating costs rose about 26%. It'll be interesting to see what this one does in the session today. It was very, very flat, but this margin miss could weigh in on the stock in the session today. Sadhana Nitrochem, 2 quarters in a row now, they've delivered exceptional performance. Revenues were up 2.6%. Profit jumped about 3.4 times as well. Margins expanded to 47.8% from 37.2%. So very strong set of numbers. Let's see if this one reacts. And Genus Power optically looked a decent quarter. Let's wait. 74% uptick in net profits. The margins expanded to 13% from 10%. So a couple of small caps that could well be in focus today as well. However, it's all large cap on First Word today. Let's tell you what's lined up. Firstly, Raghuram Rajan stake, and he explains why he wants a fixed term for the Reserve Bank of India governor. The law of averages almost always plays out in the broader markets. I take you through the Sage One Investment and the Sage One Investors memo for 2019. Very interesting piece written by Samit Vartak. Then Yatin joins us to tell us what some of the country's largest individual investors bought and sold in the third quarter. And then lastly, Agam joins us to tell us why ITC may post a healthy set of numbers for its third quarter earnings. Start off with a big voice. Former RBI Governor Raghuram Rajan wants the independence of the central bank and its governor enshrined in the act. Speaking to Menka at Davos, he argues that institutional independence creates a predictable policy environment, and that's crucial for doing business. On inflation, Rajan believes India has come out a long way, but core inflation remains a cause for concern. Listen in.
On the positive side, headline inflation has come below where most people expected it to be, obviously a result of fairly low food price growth.
Yes.
But countering that, core inflation has picked up. Now, when we set the inflation target, our view was that we didn't want to fudge by taking an easier target. We wanted the harder target, and that at that time was headline inflation.
But
now the view, of course, is that core inflation, if it is high, will eventually feed into headlines. So somebody who's looking at headline will look also at core and try and understand why core is high. But this is a technical discussion. Broadly speaking, I think there are still concerns about whether we've killed the inflation beast fully. We've come a long way. We've come a long way. But with core at 5.6, 5.7, it is saying something about whether we are at the limits of capacity, whether we can afford to stimulate significantly more without seeing higher inflation.
So I think in the layman version of this, does this mean that you'd expect this to be a year of moderating rates?
I don't know.
Do the inflation numbers set us up?
I would say that the inflation numbers are still sort of uncertain. It's not that, if you'd asked me 3 or 4 months ago, with inflation coming down, it looked like there was room building. Of course, that was a period of fair amount of uncertainty about the development of the global interest rate environment. So you wanted to be a little careful there. Now there's a sense that the Fed is stepping back a little bit. But what is something that I'm sure the RBI will pay attention to is what is happening on the core numbers, and do we understand why core is picking up more strongly? And is this an augury for the future, or can we dismiss it and say no worries?
There were two surprising things that happened with regards to the independence of the RBI last year in India. One, the sense that we got that all was not well with the government and the RBI. Which eventually seems to have prompted the Governor of the Reserve Bank of India, Urjit Patel, to resign, a sort of unprecedented move. But what was more surprising was how quickly we seemed to have gotten over that news, if I may say so. And what that means really for one of the last few standing institutions in this country. When you look back, of course, I'm sure you're concerned that, Dr. Patel stepped down, but are you more concerned about the fact that we're not yet more alarmed by what happened?
No, look, I think there's sort of misconception about independence, which needs to be corrected. There is a sense that, the government is elected by the people, the government has to determine the course, and institutions in the country should step in line when the government decides A, B, or C. And so what is this talk of independence? Now, in reality, why you create independent institutions is because in the longer run, from the country's perspective, it makes sense that even if those institutions are working for the longer term benefit of the country, sometimes they have the ability to say no to a government. And that's the notion of independence. It's not bloody-minded. It is based on the realization that governments have shorter-term political aims sometimes, and they themselves benefit from having that. So the government determines through legislation what the objectives of the institution are. Given those marching orders, the institution has to determine how it achieves those goals. If it's financial stability, how it determines NPA norms, for example. If it is monetary policy, what rate it sets interest rates at. Now, over time, we've had an understanding about independence of the RBI, and I would say that the RBI, from that perspective, has historically been given a fair amount of independence. I think going forward, we really need to think whether this independence needs to be enshrined a little more in statute. Whether we need an act which protects the term of the governor, protects the rank of the governor, for example. Because the temptation, there are so many levers that the government has, which if it wants to exercise, and again, governments have been fairly careful about this process, if it wants to exercise, basically imply that the institution has no ability to make independent decisions. The country needs that. And that's why I think we need to re-examine whether, in fact, there is a need for enshrining this in the statutes.
It's enshrined in other cases, but that doesn't necessarily mean that governments respect it. You would have watched what happened with the CBI recently.
Well,
so,
look, we are reaching the place in our development where protecting and strengthening institutions will be very important for what we need to do going forward. We need to have a process. Just now I came from a session on South Asia where one of the business people was saying we need predictability of decisions. In order to have predictability, they have to go through a process where there is a sort of check and balance, so that the whim of somebody in power cannot prevail, and that allows business to plan. And tariffs are not going to be changed on a moment's notice. The regulations are not going to be changed in a moment's notice. There has to be a process, and I think we are getting there. But we need to think of what more we need to do, because part of doing business is creating a predictable environment.
Well, interesting conversation, and of course up on the website as well, so do log on and get a slice of that conversation. The next piece, something that I want to bring to you because I quite admire the way Amit Vartak of Sage One Capital thinks, and he put out his memo a couple of days back. I've just taken some excerpts out of his writings and his observations for the last few years and 2018 in particular, and just bring it out to you. Purely an investment piece out here, but he speaks about how what happens when investors extrapolate their decisions based on exuberance or fear. So he's saying that mistakes are made when investors extrapolate the trends or profitability at troughs or peaks of the cycles by assuming that these are sustainable. Lengths of cycles may vary, but the values typically do oscillate around the mean. So if something is outperformed and if you believe that it is going to sustain, there are chances that it may sustain for a bit, but eventually the numbers may come down to mean. So it's very important for an investor to be able to identify for how long will the cycle continue before it reverses, and it's not a very easy thing for a normal investor to do. In fact, even for an experienced investor, it's a very difficult thing to do. And we don't need Amit to say that, but he said that in the memo as well. He speaks about how in the current context, the mistakes that happened wherein the maximum inflow came into the best performed mid-cap segment in 2017 and the maximum outflow inflow in the large caps as indicated by the current premium valuation is happening versus the small cap space. And here's how the dichotomy or dissection has happened, wherein we see that how inflows, if at all are coming in the large cap space and are certainly going out with a stark volumes at the small cap end of the segment. So this is the BSE 500. And it's an analysis of the percentage of companies with positive returns for 2017 and 2018. Look at the difference. The top 100 companies on the BSE 500, 2017, 90% of the companies or 91% of the companies returned positive returns. 2018, only 34%. Similarly, the numbers keep on going down, 87% versus 26%. So nothing different out here. The difference is this, that 98% of the 401 to 500th company on the BSE 500, 98%, which means almost all the companies gave positive returns in 2017. And look at the stark difference in 2018, wherein only 19.4%, which is the lowest percentile of sorts over the last couple of years at least in the small or in the BSE 400 to 500, 401 to 500 rank, which gave positive returns. And that's quite startling, which just shows that how the market seemed to have shunned the small cap space and the smaller mid cap space completely. There is also this inflow into the large caps, which is marked by the premium valuation that the quality stock portfolios of different investors have over the Sensex. And this is what this is, of course, I think he's borrowed it from Ace Equity, but essentially I would reckon that the quality stocks portfolio would mean companies qualifying on certain criteria of returns to shareholders, the kind of predictability of earnings, management pedigree, etc., etc. And just look at the difference in the median Ps and the premium to the Sensex for these companies over a period of time. So the quality stock portfolio, 2009, the median P was just about 10.6. You could argue that the market P was also low, so therefore the median P should be low. But they traded at a discount to the Sensex multiples. 2010, it moved up to 0.9. Steadily, it has gone up over the years. But just so much so that the investor mindset is so bent towards rewarding those quality stocks that in 2017 and 18, the median P of the quality stock portfolio is 42.8 times and 43.4 times, and they are trading at a 2x premium to the Sensex. Now, if indeed you believe that there will be a reversion to mean at some point of time, then investors need to be careful about paying top dollar for the quality stocks, because returns are also a factor of the entry price that you make, never mind the quality of the stock. And on the other end, you got to be mindful about whether or not the small caps are a good place to invest in currently because of the kind of discount that exists in that pocket vis-a-vis the large cap space. So this study I found to be pretty interesting. Lastly, of course, he again goes back to valuations for the quality stock portfolios and questions whether such valuations are sustainable or do they also risk the reversion to mean? Because if they do that, then the current multiples could halve. So you will have the P multiple contracting, and the only way the investor will not lose money if the earnings momentum sustains at the current run rate. So you lose out on returns. However, if the earnings also falters, then the quality stock portfolio could see a PE derating as well as earnings drop, which would actually be negative for returns. So very interesting piece written by him. Good analysis of the past and the current scenario. Last piece, he's mentioned that for the quality checks that he has, he's putting his money where his mouth is. They're opening some fund for the small cap investing as well, 500 to 5,000 crores. A bunch of investors and mutual funds are doing that. Maybe the money managers believe that this is a good time to start going out and piling into the small cap portfolio. So, well, watch out for that. But since we are talking of money managers, the next piece, and Rakesh Jhunjhunwala is one of the largest, if not the largest equity investor in the country. Investors track his holdings to try and gauge a stock or the mood, and he was particularly active in the last quarter, hiking and reducing stakes in some of his key holdings. Yatin Mota is here to take us through the details. Yatin, what did Rakesh do? What did some of the others do?
Good morning, Neeraj, and we have tried to compile the data which is available on the stock exchanges, and most of the companies that we are discussing have uploaded the recent December shareholding pattern, and we will talk about the holdings of the HNI investors, including that of Rakesh Jhunjhunwala, who is probably one of the largest investors by size or the reported holdings. Now, if you talk about the stake hikes which have happened in the marketplace, Federal Bank, of course, the bar chart is small, but he has almost doubled his holding as far as Federal Bank is concerned, and this comes in after the company was struggling with the bad debt relating to the Kerala floods. Probably the stock corrected, and he used that opportunity to hike up his stake. Nagarjuna Construction Company, NCC, that is also one stock wherein Rakesh Jhunjhunwala has increased his holding by nearly a percentage point as per the reported holdings on the stock exchanges. Jubilant Life, remember they want to list their US arm, and they have been looking at an IPO opportunity. There is also where Rakesh Jhunjhunwala has increased his stake by a couple of basis points. Aptech, and remember he is the promoter of Aptech, and there also he has increased his stake by nearly 20 basis points from 49.3% in September quarter. The December quarter filing shows that the promoter now hold nearly 49.5% stake. What's the scorecard as far as these holdings are concerned? And if you look at Federal Bank, it has been one of the best performing stock on a 3-month basis in the private banking space, 12% return coming in. Of course, if you look at the 12-month return, because of the Kerala flood, we have seen a sharp gash coming in for the stock performance. Coming to NCC, again, if you look at the quarterly performance, basically, which is September to December, largely the 3-month data captures that, a 26% jump, and this is the period wherein Rakesh Jhunjhunwala has upped his stake. Coming to the other one, which is Jubilant Life, again, if you look at the 12-month return, it has almost been 12.5% versus the 12-month return, which is minus 17.62%. So the quarter where Rakesh Jhunjhunwala has hiked his stake, we have seen some good returns coming in for the stock prices. And Aptech, look at the stock, has corrected from levels of 300 plus, but in the 3 months return period wherein Rakesh Jhunjhunwala has upped his stake marginally, of course, we have seen uptick of nearly 28.5%. Coming to the stake wherein portfolio changes are on the negative side, which is wherein he has trimmed his stake, and the list tops with Devon Housing Finance. And we have seen in the NBFC space there have been pain points, especially with Devon Housing, which is the worst hit or the worst performing stock in the NBFC space. There is where Rakesh Jhunjhunwala has trimmed his stake by nearly to a level of 2.5% from the earlier level of 3.2%. Coming to Rallis, this is a Tata Group company. Again, here Rakesh has cut his stake marginally. Titan, and this stock is one of the largest holding of Rakesh Jhunjhunwala in his portfolio. Therein also he has cut in a marginal stake of 0.04%. Of course, it is quite marginal, but it amounts to a couple of lakh shares, which is Titan sold in the December quarter ending. And Lupin also, again, this is one of his key holdings wherein he has marginally cut his stake. Let's see the price performance really for all of these companies wherein Rakesh has cut his stake. And if you look at the 6-month, 9-month, 12-month return, it is all a double-digit decline coming in for Devon Housing. So clearly under pressure. Rallis, and look at the chart, entirely red. 12-month performance minus 33%, and clearly that is not auguring well for the stock price. Tighter, of course, that is one large cap which is holding well, 26.5% kind of a return that we saw in the December quarter period. And Lupin again has been flattish, 3-month return almost 2%, wherein the period wherein Rakesh Jhunjhunwala has trimmed his stake. And this is largely what Rakesh Jhunjhunwala has done as far as his portfolio changes are concerned.
What about
Titan
the others,
and Lupin, key stocks wherein stakes has been cut.
What about the others? Because Rakesh is one, but Vijay Kedia, Dolly Khanna, Ashish Kacholia, I see the Amit there. Yeah. What have they done?
Well, Neeraj, if you look at all of these marquee investors, and starting with Dolly Khanna, he has been not that active in the mid-cap space, but these are the few stocks wherein he has hiked the stakes. So that is Muthoot Capital, Nosil, Radico Khaitan, and Rajasthan Spinning Weaving Mill. That is something wherein he has increased the stake marginally. Of course, value-wise, it will not be as high as what he was doing earlier with companies like Rain Industries and JK Paper. So these are the few companies wherein he has hiked his stake. Coming to the companies wherein he has cut his stake. Rain is one stock which has corrected significantly. Investors are worried, but so is Dolly Khanna. He has cut the stake. His family has cut his stake by nearly 20 basis points. Manappuram Finance also is one of these key holdings, holding of nearly 1%. There also is cut his stake marginally. Coming to the portfolio of Ashish Kacholia again, we have companies like V2 Retail, where he has almost doubled his stake. Mastech, another IT company in the mid-cap space, along with KPIT Technologies, is wherein he has increased his bet on a sequential basis. And Nosil also is one of his favorite counters, wherein the stake has been increased marginally by almost 10-11 basis points. Coming to the stocks wherein Ashish Kacholia has reduced his stake is KEI Industries. Stake has been cut significantly, almost by a percentage point. And Vaibhav Global, remember this is one stock wherein Vijay Kedia as well as Malabar investment funds have their investments. There is where Ashish Kacholia has marginally trimmed his stake. And finally, coming to Vijay Kedia's portfolio, two companies which have reported their holdings so far. Innovator Facade Systems. This is a SME, remember, so don't get carried away by the data coming in, wherein he has increased the stake by 0.5% in the December quarter. And Vaibhav Global, Ashish Kacholia has sold his stake. However, Malabar Investment Fund as well as Vijay Kedia both have increased the stake marginally by 15-20 basis points.
Interesting. So one interesting thing, I think that Vijay Kedia and Sumit Nagar seem to be hunting in pairs.
Yeah.
They've done this in a couple of stocks already, if not more. And of course, when Yatin was speaking about Dolly Khanna and Rajiv Khanna, he was referring to Rajiv Khanna, who operates under the name of Dolly Khanna as well. So that's an interesting analysis of portfolios. Yatin, thanks so much for bringing these to us. Rakesh Jhunjhunwala, Vijay Kedia, Dolly Khanna, Rajiv Khanna, aka Dolly Khanna, as well as Ashish Kacholia. The story there on the website, of course. The last piece, and more pertinent with what happened today, ITC is likely to report an operationally strong quarter driven by FMCG and the hotels businesses. Agam is here with what the street is expecting from the diversified consumer player. Agam, morning.
Good morning. Neeraj, we always talk about cigarettes and FMCG and ITC, but this particular quarter, it is also going to be about the revival in hotels business. That possibly could be something that could be defining for the third quarter. But I'm going to start off with your expectations. Starting off with your top line, at least as far as net sales are concerned, we're likely to see an over 11% growth in its net sales. EBITDA could rise 12%. Margins remaining steady at over 40%. That again is something that we can watch out for. Consequently, profits could see some of that uplift, but well, if one may ask, why is it that profits are rising or likely to rise only 1%? That is because of a tax write-back that the company saw in the previous quarter, where we had a court rule in favor of the company, and thereby there was a write-back around 413 crores, which was one-off in the base quarter, which is why the base looks fairly large. But let's move in and talk about your internals then, and volumes. Everyone's going to keep an eye on that. The company doesn't report volumes for cigarettes, but well, the guess is anywhere between 4 to 7%. That's the number we are working with. The other crucial aspect, of course, we have to remember is that because of the fact that there's been no change in the GST rates, there has been no price hikes, and because of that, we are likely to see an increase in volumes in the cigarette business. It is its largest segment coming through. but its other up-and-coming segment, and perhaps the more important one now, is the FMCG segment, where we are likely to see revenues rise by anywhere between 11 to 16%. Now, ITC has, already stated that, and we've seen that consistent profitability return in the FMCG ex-cigarettes business. But now the question is, how are we seeing the profits rise in this FMCG revenues? But moving on to paper and agricultural business, again, we're expecting about 10% growth, building on the kind of gains that in the momentum that we've seen in the previous quarter. And of course, as I was suggesting earlier, hotels business is something that's going to be a highlight for this particular quarter, because the entire sector and the industry has done very well. That said, we're going to keep an eye on FMCG launches, what the company has in mind, and of course the outlook as well with respect to rural as well as urban growth, not only in cigarettes but also in its FMCG sector. And those are some of those factors that we're watching out for. But on the whole, we're expecting another steady quarter for ITC. Okay, watch out for hotels, not the largest of divisions, but could be an important monitorable today. Agam, thanks for putting that into perspective. We don't often hear Agam talk about cigarettes being in the back burner and hotels being in the forefront. So let's wait and watch if that happens. That's all that we have on First Word today. There are lots more lined up for you in Indian Open, a special conversation from Davos with JSW Group, Sajjan Jindal on the race for insolvent assets, expansion plans and more. And we decode the December quarter earnings for Reliance Nippon Asset Management Company with the CEO Sandeep Sikka. But after this break, full tilt towards the day's trade.
One way to do that is to collect and celebrate the life lessons of those people.
Deepak Ramola, the man behind Project Fuel.
FUEL stands for Forward the Understanding of Every Life Lesson.
His audacious mission is to immortalize the wisdom of as many people as possible.
One thing I was absolutely sure about, I don't want it to be a quote on the wall. I want people to experience. So the experiential part is where we use different tools and mechanisms to create one act, and the act is of making lives count.
Watch his exceptional story, Pursuits by Skoda, only on Bloomberg Quint.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out there.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
हकीकत में ये गुड एंड सिंपल टैक्स है. The 500 rupee and 1000 rupee currency notes will no longer be legal tender from midnight onwards.
Welcome back. You're watching Indian Open right here on Bloomberg Quint. Good morning, Neeraj.
Good morning, Devina.
Today's session, not much in terms of the larger earnings. There's just got ITC that we're going to keep an eye out on.
Maybe Bharti, maybe post-market
yeah. And Interglobe Aviation, interesting to see what that one does after the loss that it posted for the first time last quarter. And whether it can actually go ahead and reverse that this time. And in the circumstance or in the environment that we are in with the fluctuating crude oil prices and the implications of that, and even the currency moves right now.
Yeah, but a bunch of other mid-caps as well. Right?
Yeah.
The liquor companies, Radico, United Spirits, etc. Canfin Homes, Ujjivan Financial. So a bunch of very important mid-caps.
Yeah, so it's going to be interesting to watch out for. Yesterday's session was an interesting point being that while we did see the markets come off, there was not much action in terms of the selling. So the FIs sold very marginally, even DIIs sold very marginally. So on the fund,
maybe the HNI portfolios. I don't know if that took a beating. I mean, Prabhat Dairy was a case in point. A lot of bulk deals out there.
Yeah, that's interesting. We're going to see what happens to Prabhat Dairy today, because yesterday's intraday move of that stock was a very interesting watch. So from being up 20% to being down 15% by close, and whether or not there is some sense of semblance that comes back in after the management speaks a little bit more about how they are looking to pass on a chunk of the money that they receive post payment of all the taxes and other transaction payments that they have to make. But let's take a look at what's happening in the futures and options space right now. We've got Agam Vakil. He's standing by to take us through the F&O setup. Agam, good morning.
Good morning, Devina. Well, we'll start off with futures. We're seeing unwinding in the Nifty futures, down 2% in open interest. The Nifty banking futures also seeing unwinding, where open interest has also declined by around 2%. The India volatility index, again, fluctuating, but is still above heady levels. So nearing the mark of 18. Keep an eye on that. Coming down to your open interest distribution, this is a tough one to call because we have considerably high accumulation across a whole host of strikes when it comes to put options. So the 10,500, 700 and 800 along with 900 too does have a considerable accumulation. The question really is, if there is so much support, where's the Nifty going? Is it going higher? Well, speaking of going higher, on the higher end, we actually have a lot of resistance too building up around the 11,000 and 11,100 and 11,200 calls. So, well, that only, leaves me with the possibility of, are we likely to see a little more consolidation, at least in the near term? There's unwinding in the 10,800 and 900 puts, but let's talk about other factors coming through. And of course, Adani Power and Jet Airways remains in band, but we have a new entrant in the F&O band too. We have Reliance Capital. Of course, the Nifty put call ratio at around 1.53, the Nifty banking put call ratio at around 1.13. And in among the stocks that we are watching out for, we have Page Industries, Jubilant Foodworks looking at fresh shorts. Havells India, on the other hand, looking at fresh longs coming in, going from strength to strength. And stocks which are seeing unwinding in today's day of trade, we have Mindtree that continues to see short covering. On the other hand, Adani Power and something like a DCB Bank too also seeing considerable unwinding. So it's been another mixed day of trade where your broader markets have certainly lagged your benchmark indices. The question is, can we see a continuation of that trend as we move into trade today?
Right, Agam. Thanks very much for that. That's a quick setup of the futures and options space. Amit Jeswani, founder at Stallion Asset Management, is joining us on the show right now. Amit, good morning to you. What are you doing and what are you advising clients?
Hi, Devina. Good morning, and thank you for having me on your show. Well, we're looking at companies that can scale up. See, India was a $1 trillion economy in 2008. We've reached $2.5 trillion economy. That means broadly the GDP has gone up 1.5 times. But how many companies have been able to scale up in this stage? Except for Page Industry, Bajaj Finance, probably, and Eicher Motor, there are only a few companies who've been able to scale up. So even though the opportunity in every segment you see is large, there are only a few entrepreneurs who can actually scale up. What are we doing? Well, we are 90% invested already, so there's nothing much we can do in the markets. We have 10% cash, but the first phase of the market So we are actually in the last phase of selling in the market. Now the quality stocks are falling. So Page Industries is down 30-40%. Yesterday there was a large block there. iSure is down 30%. Maruti is down 30%. So this is basically the last stage of the bear market where the strong quality stocks are falling. Every HNI, no, the mid-cap portfolios have not recovered properly in this uprise, this small uprise in the last 2-3 months. So that's one place where everyone wants to sell on rise. So this is a typical sentiment which indicates that, you know, the bottom is somewhere near. It's probably 1 month away, 2 months away, but that's like around March is the time that we expect the markets to bottom out, and we shall be fully invested. There have been a few companies which are going the right way, like Reliance and all those kind of companies. They're just showing mind-blowing growth in various business segments. So those are the kind of stocks that you need to be invested in. People who can scale up. With large opportunity, you need promoters who can scale up. So that's where we are focusing on.
Amit, narrowing it down to specific stocks, and I would like your opinion on the stocks that you just highlighted and that they've come off about 20-30%. So would that be an opportunity to enter them? And secondly, you know, if you've been tracking Prabhat Dairy, and is that something that you would write off as well? You know, because you've got coverages from most brokerages getting dropped for Prabhat Dairy now that the business itself is out of the portfolio.
So we typically back leaders. So Prabhat Dairy, we don't track it a lot, but yesterday I was reading a few notes. So the deals happen at 1700 crores. They'll have to pay somewhere around 250 crores or taxes. So they'll be left with about 1500 crores. And then if you think that they'll pay 100% dividend, you get about like 280 crores taxes would again go, because you have to pay 20% dividend distribution taxes. So broadly, the upside, the maximum upside which can happen is about 105.10. So that's the maximum upside. Now, I wouldn't like to comment. I don't know what's happening there. But yesterday, I don't know why people were buying it so much, because these kind of promoters normally do not distribute it back to the shareholders. I don't know what's happening there, so I'm sorry, I'm not tracking it very closely. But majority cases, you have Lea, you have so many examples where promoters have not distributed wealth, and the downside is 80-90% if they don't distribute wealth. So they'll give money to the related party company, and all those kind of things happen. So we don't do that. We don't buy those kind of stuff. So I don't know. I'm not tracking it so well.
No, fair point, but I think we got the message. I mean, the math was important. Our calculations also suggested that because it's a step-down subsidiary, a double taxation would probably not lead them to distribute that entire amount to the primary shareholders of Prabhat Dairy. Let's see, the management has said that they will distribute the max, but even that might not be good enough. The stock done about 15% in trade. Amit, good morning, Neeraj here. Just wondering, when you spoke about the quality companies and leaders making the difference, I think one stock that firmly fits that bill or all through and through is Sun Pharma. Last 6 or 9 odd months involved in well, a lot of issues, and the last 3 days have been as long as the last 3 years. What's the verdict now? Not about a buy or a sell, but whether what they've done takes care of the issues at hand.
You know, this is a very tough call, Neeraj. Actually, pharma was the leader of the previous bull market. So we've been avoiding pharma throughout the last 3-4 years. So we've not been tracking pharma at all. You need to look at newer leaders which are emerging. So, you know, look at stocks like DVs. Okay, those are stocks which are hitting new highs. And that there are only 2-3 stocks which are hitting new highs. That's where we are looking at. Actually, we're not even looking at what's happening in Sun Pharma or what's happening in Lupin anymore, because these guys will now take a lot of time to come back, because everyone has accumulated it. People bought Sun Pharma at 1,000, 900, 800, 700, 600, and every time they bought, they thought they're buying it cheap. So we've not been looking there. We're looking at stocks which are making new highs, because typically the stocks which make new highs first lead the bull market up. So we are concentrating on which stocks to buy on the way up. You should look at the results of Reliance and all those kind of companies, and they are coming with outstanding kind of numbers. They're scaling up really well. They're deleveraging, and you know, those are the kind of companies you need to bet in the India story. Pharma, we never understood it so well. We use a lot of outside analysts to understand pharma, but we don't have any strong views on Sun Pharma.
All right, Amit, going to request you to just stay on with us. We've got lots more to cover. But in the meantime, let's go across to our research team. Lots of earnings coming out today. Bharti Infratel, for one, expectations are not too high from what they will report in their Q3 numbers. And then you've got some other numbers that came out post-market as and some stocks that you need to watch out for. I'll start off with you, Nikki. Some stocks news.
Couple of news. Reliance Industry, where CCI has given nod for acquisition of Den Networks and Hathway to the company. IRB Infra, where the arm, the HAM arm has received an appointed date for its HAM projects for Vadodara Mumbai Expressway. Now this is an essential development because this is on back of this development the company can now kickstart the project. Godavari Power and Ispat, we can expect some sort of negative reaction coming in on the counter, given that the scheme of amalgamation with Jagdamba now has hit a tough spot, where Jagdamba Power shareholders have disapproved the scheme of amalgamation, saying that the prices of Godavari have corrected quite a bit from when the deal was signed, almost 60% correction in the share prices. So that one counter that we like to keep an eye out. Apart from that, Mindtree, where Fairfax Financial has led the race to acquire VG Siddhartha's stake, a 21% stake in the company. That's a business standard report that we're talking about. And a couple of bulk deals where Nalanda has apparently been selling a stake in the counter, where Nalanda has sold in more than 1.5% stake in Page Industries. It also has sold in a stake of more than 2.5% in Keval Kiran Clothing. And on the buying side, you have SBI Mutual Fund and Prabhat Dairy, where Alcoti Indian Subcontinent Fund has sold in a more than 1.5% stake in this counter. Apart from that, there is a development which suggests that the company in the clarification has suggested or reiterated its intent to share a substantial portion of proceeds from sale with shareholders after meeting tax and transaction costs.
All right, Nikki, thanks very much for that. Two big numbers coming out today. One is Bharti Infratel, nothing much expected on that front. But is Interglobe Aviation expected to course correct?
Well, for Indigo, if you see, compared to last year, the numbers are expected to be muted, but compared to last quarter, the numbers will be good. Now, if you see the headline numbers for Indigo, the revenue is expected to be higher by nearly 30% compared to last year, to close to 8,000 crore rupees, while the EBITDA is expected to be down by around 27% to close to 1,400 crore rupees. Margins are expected to contract to nearly 17.6%, while the net profit is expected to fall by nearly 83% to close to 130 crore rupees. However, company is expected to report a net profit as compared to a net loss reported by the company in the last quarter, which was the first time since listing where the company had reported a net loss. However, compared to last year, the numbers are expected to be muted due to lower ticket prices, higher fuel prices and a weaker rupee seen in the third quarter of financial year 2019. Now, fares on an average are expected to be low by nearly 3% to close to 3,826 rupees, while rupee on an average depreciated by around 11% compared to last year. Fuel prices were higher by nearly 31% compared to last year to close to 73,800 rupees per kiloliter. Now, along with this, a lower passenger growth and a lower load factor could be a dampener for Indigo's earning in the third quarter of financial year 2019. Now, aggressive capacity addition done by Indigo and a higher ticket prices lowered the passenger growth in the third quarter, which in turn resulted into a lower load factor in the third quarter of financial year 2019. Lastly, key things to watch out for from Indigo earnings would be management commentary on passenger growth and yields, along with that induction and issues related to the neo aircraft, fuel price outlook, and any updates on their plans of long distance airlines would be keen thing to watch out for from Indigo earnings in the third quarter of financial year 2019.
And Bharti Infratel?
Well, for Bharti Infratel, it is yet again expected to be a muted quarter due to tenancy cancellation owing to the consolidation that we have seen in the mobile operator space. Now, if you see the headline numbers for Bharti Infratel, the revenue is expected to fall by nearly 3%. EBITDA is expected to decline by nearly 10%, which will mark the fifth consecutive decline in EBITDA of the company. And this drop of 10% in EBITDA would be the biggest since listing that the company could report in the third quarter of financial year 2019. Margins are expected to come in at around 38.4%, which would be the lowest in the last 23 quarters, while the net profit is expected to fall by nearly 8% to close to 554 crore rupees. Now, the key number, that is the tenancy ratio, now that is expected to come in at around 1.95 times for Bharti Infratel, and this will be the first time in the last 19 quarters where the tenancy ratio would fall below 2 times, and this will be on the back of Vodafone Idea merger. Now, as the merger was completed, they cancelled more than 27,000 tenancies which were there with Bharti Infratel, and this will be the first quarter which will see the full impact of this tenancy cancellation. Now, the merger was completed in the second quarter, but the second quarter had seen an impact of only 1 month of this merger completion, and this will be the first quarter which will see the full impact. Now, some of this impact will be offset by higher rentals and higher energy spreads. Now, energy spreads are usually high in the third quarter, so that will aid Bharti Infratel in this quarter. Now, analysts are also expecting the third quarter to be the last quarter which will have the full impact of this consolidation. So any management commentary regarding the same will be an important thing to watch out for from Bharti Infratel earnings. Along with that, any updates on the merger with Indus Towers, commentary on tenancy addition and impact of the additional 22,000 tenancies cancellation which Vodafone Idea has announced will be the keen thing to watch out for from Vodafone Idea, from Bharti Infratel earnings in this quarter.
All right, so that's going to be an interesting watch. Yash, some numbers came up post-market as?
Yeah, I'll start with Sadhana Nitrochem, and that one reported an extremely good set of numbers. Revenues have almost tripled to 70 crore rupees versus 26.5 crores in the same quarter last year. Net profit has tripled to 27 crores versus 8.1 crores, as well as margins going up by almost 10 percentage points to 47.8%. So all in all, extremely good set of numbers when it comes to Sadhana Nitrochem. Syngene International also came out with a good set of numbers. Revenues are up 20.5% to 467 crore rupees. Net profit is up 6% and margins have expanded by close to 130 basis points. And the last stock I want to highlight is Oberoi Realty. They came out with a good set of numbers, but they have missed the analyst expectation. So revenues have grown by about 48% on a year-on-year basis, coming in at 528 crore rupees, but are still lower than the street expectation of 657 crores. Net profit is up 15% to 138 crore rupees versus the expectation of 225 crore rupees, and margins they have contracted significantly to 35.6% versus 54% in the same quarter last year. So two good earnings and one poor result from Oberoi Realty.
All right, thanks very much for that, guys. Appreciate it. A lot of stocks there that you need to keep an eye out on. Amit, I'll just come to you within the aviation pack, and today we're getting into Globe Aviation numbers, and also we're going to be closely and keenly watching out for what Jet Airways does this quarter. But what's your sense as to what's going to happen? While the expectations is that on quarter-on-quarter basis, there might be some stability in Interglobe Aviation, still performance will remain muted.
See, the thematic theme is there that leaders with the lowest cost structure typically keep gaining market share. So that's there with Indigo. Quarter over quarter, these kind of companies, it's very difficult to predict because 35–40% cost is crude. Now, at what price they purchase crude, and even this quarter is an important quarter because this will also show pricing power. They were clearly not, all aviation companies were not able to display any pricing power when crude prices went up. So that becomes a big problem. Even Indigo reported about 1,000 crores of losses last quarter. So that's a problem if an industry cannot pass on prices at all. So thematically, if someone has to be invested in aviation, then Interglobe is the only stock he can invest in, or else he can give it a skip also. There's no big deal in this sector.
Okay. Well, I kind of half expected this answer from Amit, to be honest. Amit, stay on. So much more to talk about. We just need to address the here and now before we get back to those conversations about what can people do over the medium term too. Start off with our special segment, Bloomberg Edge, wherein Yash Upadhyay tells us about a pattern that the terminal has thrown up on a stock. Yash, what's the stock on your radar today?
Good morning, Neeraj. I'll start with Voltas on the charts and a bullish pattern forming on the charts, which is the bullish engulfing pattern. Let's first try and understand what it is. Well, it is basically the formation of a large green candle right after a bearish candle, when the body of the second candle completely engulfs the one ahead of it. Well, the longer is the size of the second candle, the greater are the odds of a rally and no additional confirmation needed. Coming back to the chart, as you could see, the stock has been moving higher for the last 5 trading sessions. And yesterday it fell close to 1.5%, and from the lowest point of the day it rallied another 1% to end higher and has formed a bullish engulfing pattern. Also on the charts as well, another indicator that we're looking at is the MACD indicator, and that too has given a positive crossover, which indicates that from these levels well, one could expect for a move on the upside.
And how well does this work for Voltas?
So Neeraj, 4 out of the last 5 times that the indicator has turned positive, you would have not lost money, and it would have given you a positive return of close to 5.5% or actually 6% over the next 1 month.
Very interesting. Thanks a lot for that, Yash. Yesterday, I think a couple of other names in this pocket too had done well. Thermax day before yesterday or yesterday had inched up in trade. So this whole pocket is pretty exciting. So do watch out for these names as well. For a deeper insight though into such pieces, visit bloombergquint.com, where we identify technical triggers that have emerged in a specific stock or a sector every day. On today's Bloomberg Edge, we feature Maruti Suzuki and what its open interest and stability price band indicate. That is a BQ Blue exclusive. Okay, let's talk about technicals. Gaurav Bissa of LKP Securities joins us right now on the show with his thoughts, as does Chandan Taparia of Motilal Oswal Securities. Gentlemen, both of you, good morning. Thank you so much for joining in, albeit a bit of a delay, but I just had to address a few pieces before we came to you. Gaurav, let's start off with you. What's your approach to trade today? We'll start off flat. Are you initiating any trades?
Good morning. If you look at the sentiment, the fabric of the market, it still remains positive. We are seeing a very narrow range-bound movement. What earlier used to be 10,750, 10,850, the range is now shifted from 10,850 to 10,950. So any dip towards 10,850, 860 spot levels can be initiated to buy either in futures segment or in the option segment. And on the upside, 10,950, 980 is proven to be quite an aggressive resistance. This is going to be the case for next couple of trading sessions at least, and I expect a breakout happening only above levels of 11,000. A lot of writing has been seen in 11,000 call option. But I think before the expiry, we might be heading towards 11,100 kind of levels. For me, especially on the client side, we have recommended only on dips to be bought for Nifty index. One can buy 11,000 call option. It is closed around 70, 72. If you get around 55, 60, that can be bought on the upside. Targets of 9,500 can be expected, and the stop loss can be around 40, 45. But at these levels, I would not be too interested because the resistance is just 30, 40 points away. So for me, it's a buy on this market for time being.
Chandan, good morning. How are you approaching trade this morning?
Yeah, very good morning. Similar set of view. The market has got stuck in a range. In last 5 trading session, it got stuck in a range of 100 points in between 10,850 to 10,985 kind of level. Similarly, Bank Nifty also got stuck in a range of 250 points. But overall, the bias is positive because the supports are gradually shifting higher in the market. So looking at the entire setup, we will continue to be with buy on decline with a stop loss of 10,845 and expecting it to surpass 10,985 and then move towards 11,050 kind of levels.
Let's take a look at some stock ideas. Chandan, let's keep it with you.
Yeah, we have seen a range-bound move in broader market, but selective stocks started to do well. However, volatility has slightly moved up, but again, stock-specific action cannot be ruled out. So first trade here we have selected to be with Titan. The stock is continuously forming higher highs, higher lows on the weekly scale. On daily scale, it has given a consolidation breakout. The stock is entering into lifetime high territory. Overall, we have seen built-up of long position. So entire data setup indicates the stock is all set to head towards 1,000, 1,010 kind of level. One can buy with a stop loss of 963 kind of levels. Apart from that, we have a positive view on Bajaj Finance. This stock has given a consolidation breakout. It has taken support at the lower band of the trading range. So here we are recommending to go long with a stop loss of 25.75 and expecting it to move towards 26.50, 26.80 kind of level. Apart from that, other counter like Dabur is a good stock. The stock has taken support at its 50-day exponential moving average. Dips are being bought, supports are gradually shifting higher. So one can buy with a stop loss of 420 for an up move towards 444, 448 kind of levels.
Right. Gaurav Bissa, your stock calls?
The first recommendation today would be a buy call on Wipro. The stock is now coming out of a very, very long consolidation. You can say a 5 to 7 year consolidation has been broken. The volumes have been phenomenal. If you look at the OI segment, earlier till the time the quarterly numbers were announced, we saw a decent amount of variation happening. Yesterday we saw about 1% open risk being added. So longs are seen getting but even at these levels. 340 call option had a very, very high concentration and it's now given a comfortable close about these levels. The position targets for a couple of months can be as high as 400. For trading perspective, any dip towards 342, 343 can be bought. Stop loss of 336. On the upside, 355, 360 is what I expect in Wipro. Second recommendation would be a sell call on C8. 4% addition has been seen. It's given a breakdown on hourly chart, so a breakdown followed by fresh shorts can result in a decent fall in the name. With the stop loss of 1234, one can sell C8 futures for target price of 1190.
Okay, a minute left to go for pre-open.
No, I'm just wondering, Devena, it'll be very interesting to see, I mean, aside of course, Prabhat Dairy, what we'll be monitoring, the result reactions to some of the small cap names, Sadhana Nitrochem and Genus Power, 2 small caps, which came out with both seemingly very interesting set of numbers on the revenue front.
Yeah, and probably, I guess, you know, with these smaller names, the earnings performance gets that much more prominence with what they do. And the kind of reaction to those numbers are also that much more exaggerated as compared to some of the large cap names, which sort of have things inbuilt. I mean, you factored it in, so you wouldn't see that much of a pricing change, you know, once the numbers are reported. But for some of these small cap names, which are probably not that well tracked, and you know, you don't have too many estimates that come out for people to track them, and when they do report the numbers that they do, you do see that kind of a big exaggerated price move that comes into some of these names. So we'll watch out closely for them. 20 seconds left to go for market pre-open. That's how Asia as a pack is looking. We're up in trade, but it's absolutely flat. There's nothing much you can take away in terms of cues from the open there. We can probably move either direction this morning. That's the Nifty 50 up 0.5% right now, flattened out actually. And the Sensex 2 trading absolutely flat right now. Let's take a look at individual stocks. We'll come back to the index in just a few moments, but Bharti Infratel ahead of numbers today is down I think 1.5% or so. Ultratech Cement is down 1.8%. You've got a Power Grid on the index, which is losing out 1%. Axis Bank is down 1%. You've got TCS, HDFC Bank losing 1%. Adani Ports 0.5% given up. UPL is down 0.5%. Coal India, 0.25% given up. But losses not as much. Titan though, suddenly showing you an 8.5% cut. Again, could be just the initial few ticks that are coming in, 900 on the counter, but that should cool off as well. Asian Paints 1.7% higher. GAIL is up 1.3%. India Bulls Housing, Tata Motors recovers a bit, so 182 on this stock. HPCL, that's 1%. ITC ahead of numbers is up 1%. Remember, we're going to closely watch out for those volume figures. 4 to 7% for ITC, the volume number that is expected. Let's see what it clocks in. Gas Bank 194, Cipla Wipro up 0.5%. For the currency, some strength coming in, 71.44 with yesterday's close. Today, rupee is at 71.16.
Prabhat Dairy, and let's see what that one is doing in the session today after the slam dunk yesterday. Well, for now, looking okay. The management gave out commentary post-market close and before market open today that they are still working to best possible way to return money to shareholders.
Just look at the volatility. just like flipping.
Yeah, the first few minutes in the pre-open would tend to be that. But, well, either of the moves are possible. Let's wait and watch what happens. Let's not prejudge really what Prabhat Dairy could do. But yeah, very volatile in the session today. Let's see the results impact on some names. HDFC Life and ICICI Prudential. And let's see how these have done. HDFC Life, the numbers seemed okay. 386, the stock is holding out. What about the other one? ICICI should come out as well. Well, for now, about 3% lower.
You see Arnam also yesterday, it did relatively well. And see if today's session continues. No, I guess some profit taking.
Two mid caps and small caps rather. I don't quite know if they would be reacting, but Sadhana Nitro and Genus Power. And let's see if there is any kind of results reaction seen in either of them. And then Havells is the last one that I want to pull out. Firstly, Genus Power. Optically strong numbers reacting. Havells, brokerage's consensus verdict on an upgrade of target prices. Stock moving slightly higher. Was active in trade yesterday, as was TVS Motors, by the way. Sadhana Nitro came about a couple of percentage points higher, and TVS Motors will come up on your screen. Well, about 0.25% higher. So no big reactions, but a few muted moves for sure. We'll keep on monitoring what's happening to Prabhat Dairy, by the way, during the course of the show as well. But the insurance names that came out with the numbers, Amit, you would be looking at that bucket too. I'm guessing that quarterly numbers don't necessarily move the needle too much on such large names with long growth trajectories. But are you in the favor of buying any of them or replacing any of them with something else based on the quarterly numbers that have come out?
So insurance, I'll just explain you in 1 second what's the whole space about. The industry size of insurance is 4.5 lakh crores. The private player is 1.2 lakh crore. This is the premium that we get. The 4.5 lakh crore is the total premium we get. 1.2 lakh crore is for private players, and 3.3 lakh crore is with LIC. So that's the total premium that we have. Now I expect this number to go up to 12-13 lakh crores in the next 7-8 years, the 2025 kind of story. Now, will these private players would be 3x bigger, 4x bigger? That can be anyone's call. So that is a long theme. Insurance is a great business. The best thing about the insurance business is that except for SBI, ICICI and HDFC, no one can come and sell an insurance, because like if Stallion Assets starts selling insurance, who's going to trust me for 40 years, right? I might be there, not be there after 40 years. So there's a very strong moat. The valuations of these companies trade between 3 times to 6 times. HDFC Life is at 6 times. Typically, return on EV is the best matrix to use to evaluate how good the company is doing. SBI Life and HDFC Life are definitely our top picks there. And this is one space that you will go wrong on valuation. Of course, these are very expensive things, but globally, the market cap of insurance companies is larger than the market cap of credit companies like banks and all that. So insurance is the best space, because in a credit business you make profits when the last EMI comes back to you, and in the insurance space the only time you pay money is after 30-40 years. So this is a great business model. This should be part of everyone's portfolio. Our top picks here are SBI and HDFC Life. We do not even look at quarterly numbers so carefully here, so I don't know what's happening there. I've not seen the quarterly numbers so well.
Amit, what's your view on ICICI Bank? Because that seems to be, a recent favorite, after the recovery that we've seen in the counter, and also from an operational standpoint. Is this the one that could be, a horse for the long race?
Of course, there's a change in management. Now, if you look at we might have vested interest, we might not have vested interest here. This is not a recommendation. So ICICI Bank, there's a change in management. Everyone we are speaking to is saying very good things about Mr. Bakshi of ICICI and Mr. Amitabh Chakrabarti of Axis Bank. These both banks have got now change in management. If you see the percentage of retail in the portfolio of both these banks in the last 3-4 years, they've gone up at least 30-40%. So these guys are now more of retail franchisees than corporate, which they were a few years back. I think the worst is behind them. But this has become a consensus trade, which is a problem, because every broker who calls me says that buy SBI, buy ICICI and Axis. That's the only downside here, that it's become a super consensus trade. But these franchisees typically should do well. I don't have a doubt that these guys will not do well in the next 2, 3, 4 years. And even if you look at the price action, which is very important in a bear market kind of scenario, if you look at price action, these are the first banks which are broken out. It's not been the IndusInd Bank, it's not been the Kotak, it's been these kind of Axis and ICICI which are showing very long-term breakouts. So we're very positive on these two banks.
Okay. A lot of queries, Amit, for you that people have asked, and we'll ask some of those. I mean, somebody's asking about your view on Edelweiss, and Edelweiss and NBFCs would be an interesting conversation as well, but we'll just come back to that in a bit. The pre-open rates seem to have settled, and we just need to highlight what's happened at the end of the pre-open session, or just at the end of the pre-open session. ICICI Prudential post its numbers is looking like starting off maybe 2 or 3% lower, 3.5% lower. So the results impact being seen that it was a mixed quarter for that company, and that's why this reaction. HDFC Life, on the other hand, should come up on your screen, and let's see whether the start, which was marginally in the green, stays. Yeah, it was a decent quarter, and it's duly showing. Asian Paints, I think the convergence, I read a brokerage note which spoke about how this quarter seemed to be a lot more buoyant than what people otherwise would have thought. At 1,429, 1.5% higher, so strong showing by Asian Paints. Syngene, not a bad quarter, and that stock too seems to be doing okay. But the mid-size companies, the likes of Genus Power and the others, would be the ones that will be showing the exaggerated reactions. I presume 10% higher. This well turns out to be the stock of the morning. Just before we get in all that you need to know, Gaurav, Bissa, I want to come to you first. Asian Paints, reasonable move yesterday, likely to start off well today. Is there a trade here?
Well, there's an immediate hurdle if you talk about Asian Paints above levels of 1435, 1440. For me, the trades would be into picture if it manages to trade above 1435, 1440, keep a stop loss of 1420, and on the upside 1465, 1470 can be possible. Not at these prices, but a little bit higher, it would be giving a fair degree of confirmation that the breakout is being sustained.
Okay. And Chandan, Taparia, a view on Ashok Leyland, a bunch of queries around that. The stock has been on a bit of a tailspin. Can it slide further?
Yeah, not comfortable with Ashok Leyland. The stock is continuously making lower top, lower bottom. It has been falling down from last 5 consecutive series, and shorts are being rolled to the 1-2 next series. So here I am on immediate basis not expecting it to surpass 94, 95, or on the downside looking for a decline towards 85, 84 kind of level.
That is Ashok Leyland for you, trading close to its 52-week low. In fact, made a new 52-week low. But we're just about a few minutes away from market opening, so we're going to tell you all that you need to know to stay ahead and trade this morning, but we'll come to that in a bit. Deven Choksey, though, is here with us. As we get ready for trade, you're going to be watching out for closely the earnings that come in. ITC, for one, reports its numbers today. Volume growth is going to be important to watch out for. 4 to 7% is what the expectation is.
Yep, let's tell our viewers all that you need to know to stay ahead in trade today. And start off with Mindtree. Fairfax Business Standard says that Fairfax may acquire Vijay Siddhartha's stake in the company. The stock starting off about 1% higher in trade.
Moving on in key bulk deals, Nalanda India sells 1.7% stake in Page Industries at 22,161 rupees per share, while all equities Cav sells 1.6% stake in Prabhat Dairy for 86.5 rupees per share.
Premium income for HDFC Life grows 27% but sees contraction in value of new business margins. ICICI Prudential Life 2 posts a 27% growth in premium income but profit declines 34%.
Macquarie upgrades Asian Paints to outperform from neutral, hikes target price to 1580 rupees per share, while CLSA maintains outperform on Havells India, hikes target price to 775 per share.
Okay, so those are things that you need to monitor in the session today. Asian Paints is likely to start off as the top gainer. Infosys is likely to start off marginally lower in trade. At the broader end of the spectrum, we already spoke about a bunch of names which have duly reacted already on the numbers. Tata Communications somehow seems to start off low. ICICI Prudential 4.5% lower. Deven Choksey of KRChoksey also with us. Deven, thanks for joining in. We'll get the market view going in a bit. Just a quick thought though on ICICI Prudential. We saw HDFC Life numbers and the verdict thereof, but the ICICI Prudential looking like starting off about 4% lower. The numbers seem to be a bit of a miss. What's your verdict here? Should people look at this one or should people stick to the other life insurers?
Yeah, good morning, Neeraj. Well, I think when you look at the SBI Life's result and HDFC Life's result, I think you get one confirmation that the new business premium growth is growing at the rate of 25% and little above that also. Whereas I think in case of HDFC Life, I think you also have seen the profit growth at 20% plus rate of growth. In case of ICICI Prudential, I think what is more surprising is that I think the new business premium growth is eyeing sub 15%, and the growth is not happening out there at the same time, which means I think clearly the companies with differentiated products I think is now taking the lead charge as far as I think their penetration in the market is concerned in bringing the new premium into the fold. In life insurance businesses, I think two things definitely means a lot. One, I think your ability to bring the new products and bring the new insurance premium, the new business premium as we call it as, is on one side, and at the same time I think bring down the expenses ratio. If you bring down the expenses ratio, then probably I think this makes more sense for the companies to bring the profitability. I guess I think in detail the numbers of ICICI Prudential will have to be studied as to where exactly they missed on the expenses ratio. But I think certainly the concern would be that they are not having the new business premium growth, and I think the products will have to be once again looked at, I think, as far as this company is concerned. So clearly our view has been that I think HDFC Life remains I think among the best along with the Bajaj Life Insurance. I think there the product portfolio is remaining robust. At the same time I think their new business premium growth continues to be higher side, and both these managements are working extremely hard on bringing the cost ratio down. So that gives me the confidence that I think in the industry, these two companies are worth relying upon, which is HDFC Life and Bajaj Life Insurance. So I think that is where we find ourselves more comfortable.
Okay, just close to a minute left to go for market opening. Let's get our top calls from our technical experts. Gaurav, Bissa, let's start with you.
My recommendation would be Wipro. The kind of long-term breakouts it has seen and the kind of data it has been seeing so far, it can test levels of 355, 360. Short-term, that would be target. Long-term, 400 is quite possible.
Okay, what about you, Chandan?
Continue to be with the recommended stock, including Titan and Dabur. Titan looking for an up move towards 1000, 1010. Dabur looking for an up move towards 444.
It's a quick take on Yes Bank. Gaurav, quickly, Yes Bank.
Yes Bank, you buy on dips towards 190, 189, keep a stop loss of 186 on the upside. 200 is quite possible, but at 194, 195, this what is not that favorable.
Okay, so it's not a buy call, it's only a buy call on dips. So I just need to rephrase that. It's not a buy call from Gaurav. Bissa, keep in mind the results come in later on this week as well, so important ones to monitor. But Wipro being the top call and Titan being the top call, along with Dabur from both of our experts. Well, here's how the markets are starting off. A very flat note, hardly any movements on the benchmark indices. The mid caps and the small caps, I reckon, too, would be starting off flattish to maybe marginally lower. No, flattish for the time being. Let's wait and watch. The Nifty Bank already slipping into the red, but largely flattish. Keep that at the back of your mind. Let me step straight to specific stocks and let's see what's moving and what's not. Not too many losers. IT looking like taking a breather. Mind you, the last couple of days that I've said that IT is taking a breather. Some of the stocks later on move up as well. So for now, it's starting off with 2 or 3 stocks looking slightly wobbly, including Infosys, which is a heavyweight, down about 1%. But aside of that, no big cracks coming in on the IT space as well. What's Wipro, in fact, as we said, is doing rather well for itself. Yes Bank, Indiabulls Housing Finance, those two are doing okay. Strength in HUL, strength in Cipla, strength in Bharti. HCL Technologies, in fact, in the green. So as we said, the dichotomous trend in IT continues, but it's a very flat start for the markets, and stocks on the Nifty too are exhibiting that. No big movers. Let's wait and watch what happens to this set over the next 45 minutes of trade. Maybe focus on the non-Nifty names or focus on the stocks in news. A couple that I want to highlight before I hand it over to Devina for what's happening across the wider spectrum. Firstly, result reactions. Are they being seen in select names in the insurance space? HDFC Life about 1% higher, but ICICI Pru corrects about 3.5%. So the results impact definitely seen on ICICI Pru in the session today. What else? Some Prabhat Dairy remains a stock in focus, and let's see how that's starting off today after the brutal trade that it had yesterday. Another 7% loss. I don't think the street is in any favor of trying to give it any benefits of doubt. 73.80, and it continues to bleed. Last but not the least, let's pull up the companies which come out with numbers today, and ahead of the numbers, each of these are very flat. Indigo, after the 5% up move yesterday, starting off marginally lower. Devina, what are you spotting?
Well, some more result reaction. So we'll start off with what's happening to a Sadhana Nitro, following that up with Genius Power and Oberoi Realty, and whether or not that sees any sort of a cut because of the squeeze on the margin side. Oberoi Realty flat to marginally lower, just down 1% odd. Hathway Cable though is doing well, about 3% higher this morning. DB Realty has moved up to 5%. You've got the likes of Watek Wabag, that's up about 2.7%. Inox Wind continues. Yesterday was not a bad day. Today is up about 2.5%. Den Network, so Hathway and Den both up in the session. Jubilant Life is up 1.8%. Abdan, we've got Mindtree, 1.6% higher. We already spoke about Jubilant Life. 8K Miles moves up 1.7% this morning. Dredging Corp about 3% in trade. Praj Industries finally moves up yesterday after losing steam for 5 consecutive trading days. You've seen the stock finally take a bit of support and move up in trade this morning. Amongst the bigger losers, you've got the likes of the ones that we already spoke about with regards to the numbers that have come out, like ICICI Pru. But Religare is down. Linde India is at 658. Coromandel is at 430. TVS Motors loses a bit, 1.5% under. Dish TV at 34, and JSPL2 continues to grind a bit lower in today's session.
Okay. So, well, that's the verdict. And by the way, IT is now starting off looking weak because both Infosys and TCS are the top 2 losers on the index. So, do watch out for both of those names. They are not looking all that great right now. And at the broader end of the spectrum, as we said, ICICI Prudential, the top loser. TVS Motors corrects a little bit from the highs of yesterday. And on the gaining side, as Devina highlighted, Praj Industries stands out too. But let's talk about some of these as well. And we'll talk to Amit Jeswani about the NBFC space and Edelweiss. But Deven, Choksey, to you first, based on whatever your market mood would be right now, would you be looking to reward some of the companies that have come out with good numbers? TVS Motors, a case in point, for example?
Not immediately, I think, reacting to the numbers of TVS Motors per se, Neeraj. My long-term interest, I think, stays in a company where they are basically focusing on building the margin at the same time, I think, while they are talking about the volume. In case of TVS, I think the volume is largely propelled by the scooters, I think, at this point of time. And I think the margin remains in a sub-single digit kind of area. So that is an area where I'm not very comfortable, because I see the competition is putting lot of pressure on individual companies, I think, to protect their margins. And unless you have the product portfolio which basically brings the better margin, I think you would be slightly vulnerable in a given situation. The confidence level within the two-wheeler space distinctly remains high with Bajaj. The kind of strategy that they've employed for the exports market and the domestic market, kind of strategy that they have employed from starting from 100cc two-wheeler to going up to as high as 1100cc two-wheeler going forward. And I think getting into the electric vehicle segment with commercial vehicle portfolio on one side and I think two-wheeler portfolio on the other side. So I find, I think, that much visibility is available in Bajaj, along with 15,000 crore cash in the balance sheet, is giving me a lot of confidence and comfort, I think, to stay with Bajaj vis-a-vis other two-wheelers, because I believe that I think they would have relatively larger growth to talk about in the business, and also at the same time I think would have some higher margins compared to their peers for sure. I think though their own benchmark level, I think they are little less, but at the same time they are producing better numbers at this point of time. So remaining comfortable more with Bajaj in the two-wheeler space.
All right. I think Neeraj has already alluded twice that he wants to go to Amit and ask him about the NBFC space and Edelweiss. So I'll just come to you with that one, Amit. You've had a positive outlook on Edelweiss some time ago. I mean, do you still hold that? And what's the overall outlook on the entire space and whether or not you would be a buyer?
So we still hold Edelweiss, but this is just a disclosure that we have vested interest. We can sell, buy anytime. So Edelweiss is divided into 6-7 businesses: the capital market, the business, wealth management, asset management, insurance, ARC, NBFC. Out of the NBFC business, they have 46,000 crores of loans, which is not a problem. But the 12,000 crore loan given to real estate. So out of 46,000 crores, 12,000 crore loan is given to the real estate division. So those is typically a problem. Now we'll speak about the real estate business only because that is the reason why the stock has come down. So real estate, so they have two things in real estate. One, they have an AIF, which is 15,000 crore of AIF. On that, they make 2% fee. Loss hua, that is client's loss. So that is not a big problem. The year flat 300 crore fee they get on the AIF book, which is like a mutual fund kind of thing. The second is their own exposure towards real estate. They have a 12,000 crore exposure. Now, if you divide that exposure, more than 80% exposure is towards, more than 70% exposure is towards projects which are already more than 80% completed. If a project is more than 80% completed, you can just fund him a lot more money and finish the project, because once the project is finished, it is very easy to solve, to sell it and get the money back. So that's not a problem. The problem is the 10-15% book, which is where the project is less than 50% completed. So that's the point. But if you see that, like, even if the default happens, I think they have one of the best ARCs in the country. So if the default happens, they will just not let the builder default. the loan will be sold to the ARC, and the ARC will then restructure the loan, and they have done this in the past. So if you look at how they have done it in the past, they've done it for 3 malls and about 5-6 residential projects. So they've done it in the past. I don't see why they will not do it in the future. The street's very cautious right now. This quarter will be a weak quarter, of course. There is no growth in NBFCs, but the normal growth rate of 30-40% in NBFCs has now changed to 20%. So some derating was necessary. They were trading at 4-5 times book. Now I think the new normal would be somewhere around 2-3 times book. Edelweiss is already trading at 2 times book right now. The book values are somewhere around 80. So I think from these levels, they again become compounders. They'll bounce back. But you need to see 1-2 quarters and then take a very large call on this. But for now, we are holding on to our positions.
Amit, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time. Thanks for being with us today.
Thank you, Neeraj. Thank you so much.
Yeah. The stock that's still looking under a bit of a cloud is Prabhat Dairy. Now, Deven would have looked at multiple such incidences, not just in the dairy space, but otherwise as well. Deven, one, the math that the company is trying to explain, but two, your gut of how a company which came out with an IPO 2 years ago and for the last few quarters has been talking about how the dairy sector looks poised for growth, suddenly comes out and says that they are willing to sell off their entire business to somebody. So one, the math, and two, the action. And therefore, what would your advice be to somebody who's still holding on to the shares of Prabhat Dairy with the limited knowledge that you have right now?
Yes, I think an important area to look at, Neeraj. When we looked at the dairy sector per se, I think we found one thing very peculiar, that unless and until you have got a battery of value-added products, I think your margins are going to be sub-single digit, which will be in a 2-3-4% range. I think most of the dairy companies probably would struggle in this area because of, I think, except Parag, where I think they've been focusing more on the value-added products and I think creating the margin pool for themselves. I think rest of the companies are going to face this particular challenge. Plus, at the same time, if you look at this particular sector, I think it's highly capital intensive. The amount of equipment for processing the milk which you have vis-a-vis the kind of a business that you end up producing at the bottom line is definitely, I think, not asking for putting a serious money behind this particular sector for sure. So unless and until you have created a strong retail outlet wherein I think you can sell your products and fetch better margin, I think you are not going to be very successful. Remember one thing, I think companies like Nestle and Britannia, I think where basically I think in the global market, Nestle kind of companies so very successful with dairy product portfolio. Even in India market, I think they would not command better amount of business, and also because of the fact that they can't command the price enough, I think beyond a level except in metros. So from that perspective, if you look at it, I think it's going to be very challenging business. Companies like Amul would probably, I think, definitely dominate. Amul has today got more than 250 products. Many of them are not even on the shelf. I think they are ordered on the B2B basis by the people who are consuming them at institutional level. So I think from that perspective, if you look at it, I think unless you have created a large size of distribution where you can distribute your product and probably get better margin out of it, this business is not going to be rewarding. I'm not too sure about, I think, the acquirer who has basically taken this company, a French company, where exactly I think their money would be and how exactly they are going to create the portfolio out of it. But we'll wait and see. As of now, I think my reading says that I think Parag looks relatively better, though I think on valuation I'm still not very convinced. But otherwise, I think rest of the companies probably stay away from them.
Right. Devin, so far, I mean, conversations that we've had, it seems like, the way forward are financials. And that seems to be a more of a consensus call, and a few stocks thereof, ICICI Bank for one, is what most like. Anything that you are contrarian on right now that you feel has probably not lived up to the mark of late in the current environment, but has the potential to give great returns?
So Devina, I think my viewpoint here would be that some of the companies which are showing extremely good signs of growth, I think would be one among them would be Kotick. ICICI, of course, I think is a story which is already marketed. They are sitting on large amount of liquidity currently. So to a greater extent, I think their appetite to buy a new product portfolios, I think available from different NBFCs, etc., I think would be very high. and that could possibly, I think, give them a year-over-year growth, definitely for sure, because earlier years they had a muted growth. So I think on that lower base they are likely to show handsome growth hereafter. But the clear indication for me, I think, if I have to look at the businesses for next 3 to 5 years, where I believe that the companies are gearing up well for the position, is Kotak. In case of Kotak, I think one particular possibility is that the financialization model is basically going to happen, in which they would probably monetize some of their verticals in which they have invested money. Ultimately, I think they would be separately listed, and probably Kotak would find better value out of him. That is one thing, be it insurance business, be it AMC business, be it NBFCs, or for that matter brokerage business. I think this entire chain of verticals that they have created could possibly see the valuation unlocking. That should be the major theme. The second part is they are using the technology to the core, and probably I like that kind of a approach. They are basically, I think, going much ahead in advance, I think, in making the blockchain available to them. Not that other banks will not do it, but I think Kotak probably is showing little better visibility. Given that kind of a situation in which I think you are employing the blockchain at the back, probably I think your cost structure will come down, and as a result of which I think you will be able to protect the margin. So that is the confidence that I am getting out of the model that Kotak is following. So certainly, I think the approach would be that I think Kotak HDFC would be on one side. There, I think we remain extremely confident for sustaining the growth. On the other side, I think Axis, ICICI and IndusInd, where I think you are likely to see the jumps, I think, because of the growth that they are already producing currently. Continuity part is relatively there, but I think I would like to see them happening over a few quarters as well. This is the approach we are keeping as far as corporate banking space is concerned. We are in keeping Kotak and HDFC in one pocket, where we feel extremely confident that a 20% plus kind of a CAGR growth will continue in these companies.
All right, Deven, Choksey, appreciate you taking out the time. Thanks so very much for joining us this morning with your views.
Thank you.
Markets for themselves, stable, just about 1/10% higher this morning.
Just want to mark one stock that stands out today, ICICI Prudential, 7.5% lower now. They've been at 318 and counting. The street certainly not taking these numbers well.
Yeah, but we've got the rest of the day lined up ahead of us, and in a market like this where you can expect a whole lot of swings in prices, let's see what this one does till the end of trade today. So right now, 7.5% under, 319 for ICICI Pru.
Let's take a break. On the other side, a special conversation from Davos with JSW Group's Sajjan Jintal on the race for insolvent assets, expansion plans and more. And then we decode the December quarter earnings for Reliance Nippon Asset Management with CEO Sandeep Sikka.